For decades, we've all heard this one singular story about China, right? That it's this unstoppable economic force, a dragon that's basically destined to own the 21st century. And the sheer scale of its growth has been absolutely breathtaking. So let's dive into this.
I mean, just look at these skylines. They're basically a monument to an economic miracle. In just a handful of decades, China went from being, relatively poor to becoming the world's factory floor. It lifted hundreds of millions of people out of poverty and built these incredible cities that look like something out of a sci-fi movie. This right here, this is the economic dragon we all have in our heads.
But what if that's only half the story? What if, hiding underneath all that incredible strength, there's a really deep, fundamental weakness? A recent Morgan Stanley report just nailed this with a perfect paradox. They said China is an economic dragon, but it's also a financial flea. Think about that. It's a total giant in the real world of making stuff and trading stuff, but in the global financial system, the system that makes all that trade possible, it's a lightweight. And that contradiction, well, that's at the very heart of the crossroads China is facing right now.
So, let's really unpack this idea. How can a country be a dragon and a flea at the exact same time? Well, the numbers tell a really fascinating story.
Okay, check this out, because this chart shows the huge disconnect I'm talking about. First, look at the big numbers. That's the dragon's roar. China makes up a whopping 18% of the world's GDP and 13% of its trade. Huge. But now, look at the tiny little slices for its currency, the renminbi. It's used in only 3% of global payments, and it's just 2% of global reserves. That is the flea.
So here's the key takeaway. For all its economic power, China is still playing in a financial sandbox that's dominated by others, especially the US dollar. And this lack of financial clout isn't just some abstract issue. It's actually a symptom of some really deep problems back home.
So to really understand the flea, we have to look inside, at the cracks that are starting to form in the dragon's own foundation. And there are three really big ones.
The first crack is a number that is just staggering. It's hard to even wrap your head around. Negative 47.2%. According to the World Bank, that's how much the value of new home sales has just cratered from its peak back in 2021.
Now, this is not just a market slowdown. It's a full-blown collapse in a sector that makes up a huge part of an average family's wealth in China. I mean, imagine if the main source of your family's net worth just evaporated. You'd stop spending, right? It absolutely demolishes confidence. And for a government that bases its legitimacy on delivering prosperity, this is a massive political problem.
And, that leads us directly to the second crack. Chinese consumers just aren't consuming. The Rhodium Group points out that household consumption is only 39% of China's GDP. Just to put that in perspective, in most developed countries, that number is well over 50%, sometimes even higher. The main engine of the economy is just sputtering.
So, why aren't people spending? Well, the reasons are pretty deep-rooted. For years, the whole system was designed to prioritize big investments over people's wages. Income inequality is a major issue, and they have a pretty weak social safety net, which means families have to save like crazy for things like medical bills or retirement. It's called precautionary savings. People are just too scared about the future to spend their money today. And to top it all off, household debt has gone through the roof.
All right, the third crack is basically a demographic time bomb. By 2045, it's projected that 28%, that's nearly a third of China's entire population, will be over the age of 65.
And as this timeline shows, this isn't some distant future problem. It's happening right now. The workforce has been shrinking for more than a decade. The total population is actually falling. There's that famous saying, China is getting old before it gets rich. And that puts a huge long-term brake on any kind of economic growth.
So you've got this perfect storm, right? A collapsing property market, nervous consumers, and this looming demographic crisis. How does that reality possibly square with China's big ambitions on the world stage?
Because on one hand, Beijing is projecting this image of pure strength and confidence. President Xi's warning to President Biden not to play with fire over Taiwan. That's just one example of a much more aggressive foreign policy. This is the dragon roaring for the whole world to hear.
But all that tough talk immediately bumps up against the reality you see in this table. Yeah, China's GDP is getting closer to the US, but its financial power? It's not even in the same league. Just look at the columns for global payments and reserves. The US dollar is king, with 41% and 59%. China's renminbi is just a tiny little fraction of that. All these domestic problems really tie Beijing's hands.
It's pretty risky to challenge a global system when you're still so dependent on it.
So, why does any of this matter to the rest of us? Well, because the choices China makes to fix its own internal problems are going to send massive ripple effects all across the globe.
You might be asking, well, why don't they just give people money to get them to spend? And this quote from Xi Jinping, which the Rhodium Group highlighted, gives us the answer. There is a deep ideological resistance to what they call welfareism. Basically, they're afraid that Western-style social safety nets and consumer stimulus will just create lazy people and weaken the state's control.
So this creates a huge dilemma for them. The problem is crystal clear. The old way of growing their economy is broken. And the solution is also pretty clear. You gotta rebalance the economy by putting more power and money into the hands of households. But the obstacle? It's immense. It would mean completely changing their economic model, and it goes directly against their core political beliefs.
And so, the whole world is basically holding its breath. If China can't get its own people to buy more stuff, it might try to export its way out of this mess. That could mean flooding world markets with cheap goods, which would create some serious trade tensions with everyone. Their decisions are going to affect supply chains, the price of everything from steel to solar panels, and really, global stability for years to come.
So at the end of the day, China is standing at this historic crossroads. Does it take the path of painful, politically dangerous reform to really unleash its consumers and fix its economy for the long haul? Or does it stick with the old plan and risk a future of stagnation, what you might even call a managed decline? The dragon's next move is anything but certain, and you can be sure the world is waiting to see which path it takes.